Hey, what's up, guys? So I was talking to a few of my students the other day, and there was a stock that was popping up, and I was explaining to them exactly how I would have looked to trade the stock, and they were actually asking me if there was any live examples, and there happened to be a stock that was popping up, and I told them that I was going to record on my phone, and so I recorded it, and I shared with them, and I want to share that footage with you guys real quick. So. The stock is LFLY. And what I was telling them was that it had already found a topping and this thing had shot up to $4.22. And so what I wanted to do is I wanted to see this thing drop down and find a floor. When I explain trading, you want to find the ceiling, which is where like the big hands, the people that have a lot of money are unloading their shares into the retail traders, the people that don't have a lot of experience and they're just chasing the stock thinking it's going to go to the moon. So they unload their shares here. Well, then it finds uh the floor where the big money is buying up the shares again, and it's on much lower volume, and then all of a sudden it just starts ripping up, and they start selling into it again. And so you watch this really fast. I actually recorded it perfectly. So if you start watching, you start seeing how it unloaded a little bit of shares, and all of a sudden, here in a second, boom, I'm instantly in. And when I was talking to my students, I was just like, that's the trick right there. When you see something shoot from $4.09, it pops down a little bit and then just stuffs down. I told them I'd be in at $3.93, and I recorded this in, and I was like I said, I was talking to them. And how I would play that out really quickly is this is the stock. Oop, oop. What I would do. So this is the level that it was popping in at, right? I drew in my line at $3.93. On this particular setup, I would be risking 422. And just to make it super simple, let's just say that I have four targets that I aim for. And so let's just say that I took 400 shares to make it super simple. So what is that? That's 393 to 422. So that's what 30. So 100, I'm risking $120 on this trade. That might be more than you'd be willing to risk on one trade, and that's fine. Like I'm just using it for an idea. So I would take a trade there after you see the signal that I saw on the video and I just showed you. You take a trade right here. You would cover 100 shares right here, making about $71, about $71. And then the second that this happens, now you're not risking up here. Okay, so who cares? This thing doesn't just die. It curls back up. It stops you out. Okay, so you made $70 in like 5 minutes. Or I mean, if you're there from 9:30 until here, it's 10 o'clock. So you made $70 in 30 minutes. Okay, awesome. Now, it just starts dying. It drops down here to, you know, let's see, what is this? $2.92. That's $100 on 100 shares. You made $100. So there's another $100 down here. Another $120, and then the final target down here is like 140. So that's like 300, 370, 360, for $430. $430. And once you're in the stock over here, you're risking here. But the second the first target's hit, then you lower your stop to break even. Like for me, if you make everything absolutely systematic, and I know exactly where my trade is, I'm going to get in at this point, I'm going to risk this point. my first target's hit, then I lower my stop to break even. It really helps a lot get away from the emotions because there's so many different emotions people are going to run into. They're going to run into greed or anxiety and FOMO, stubbornness, all sorts of stuff. But if you make it more systematic and have the discipline to follow that, it makes it so much easier. And like I said, you know, 400 shares, that might be too much for you to risk. Like $120 on one trade might be too much. Okay, so say you're risking like $60. So half that. Okay, like $60, I mean you're still making a good chunk of money. I would not cover exactly the same way on that trade if I was doing that, but still like the idea is the exact same. Like once it hits the first target, you lower your stop to break even. Okay, like now you don't have any more risk on at all. You got all the experience you needed. You got to take a trade, you got to see the action, and you got to see the stuff, which is what that did. It was stuffing out. It was the big money was unloading all of its shares, and there was a buying exhaustion. And the second there wasn't any more buyers, they just dumped it. And they unloaded all their shares. They made a bunch of money really fast. And now there's a bunch of people that are panicking because they bought this breakout level, and now they're stuck. And now while the big hands, the guys that have all the money, are unloading all their shares into the market, now they're scrambling over trying to sell the shares, and that's why the stocks die. Most of these stocks that are these small cap stocks, they're doing exactly the same stuff over and over and over. You're not trading Tesla, you're not trading AMD, you're not trading, Amazon, like you're trading crappy companies, and it's a completely different game. You have to have discipline, you have to know exactly how to trade these things to make it work. So hopefully you guys enjoyed this little lesson. You learned something, and I'll see you in the next one. If you guys want to learn more, then click the link down below to join my free community.